Becoming Your Own Banker, 5th edition, Unlocking the Infinite Banking Concept. Best-selling author R. Nelson Nash. Review of parts 1 through 6. Basic understandings. You finance everything you buy. You either pay interest to someone else or you give up interest you could have earned. 2. Create an entity, a plan which you control, and it makes money on your loans. One such entity can be a life insurance plan. Life insurance company hire actuaries who design plans of insurance and then market those plans through agents. When someone buys one of these plans, the contract is very specific to point out who owns the plan or policy. It is not the insurance company. The company is simply the administrator of the plan and must collect the premiums and must lend money out or make investments of one kind or another in order to be able to pay the death claims promised. Money is lent to any number of places and types of borrowers, including the owner of the policy, if the owner so desires. The amount of money available to the owner is the entire equity in the policy at the time. In the hierarchy of places where money is lent, the owner ranks first. This is absolute control. At the end of the year, the life insurance company makes an accounting of the experience that year of the death claims paid, the earnings on the premiums collected, the expenses of running the company. A dividend is declared, which is actually a return to the policy owner of a surplus premium that was collected. Hence, it is not an earning, and therefore it is not taxable. What that dividend is, then used to buy additional paid-up insurance at no cost. Then the result is continuous compounding of an ever-increasing base. Your review. The importance of imagination. It is more important than knowledge. Goss, a child prodigy, didn't think like others and made valuable contributions to the world. Can you add the numbers 1 through 1,000 in your head? The answer? 500,500. 2. The grocery store business, the value of learning how to get into a business in which you are a consumer of the same thing you sell. It requires extensive study of the business prior to the startup. It requires very high capitalization. It requires extraordinary management abilities. When you shop for groceries at your store, don't steal or your business will fail. 3. The money problem. Only money left over after paying taxes can be spent. For the average person in the United States, 34.5% of that sum goes to pay interest alone to finance car purchases, homes, and other purchases. This money is gone forever. It is making persons in the banking business wealthy. It can be yours to enrich your life forever if you get into the banking business. Learn the importance of the economic value added concept. 4. Creating a bank like the ones you already know about is much like getting in the grocery store business, except much more difficult. It requires much more capital. You have to get a charter from the commissioner. When you make loans to yourself at a bank, don't steal. You will destroy the best business in the world. 5. How a dividend-paying life insurance policy works. Review the diagram on page 26 and make sure that you understand the flow of money. In addition, make sure you understand the characters in the play. The policy holder is the principal character in the life insurance policy. 6 is the capitalization phase. It's going to take time and discipline for several years. Don't expect to get rich overnight, but the rewards later on are all worth the effort.